Let's get across what is likely to move markets as we head into this week. Peter Maguire joining us from XM. Pete, terrific to catch up with you again on a Monday morning. Of course, it's still all about central banks, isn't it? Given we had the Fed last week, we've got our own RBA this week, also the Swiss
Yes.
doing their thing as well. Let's first take a look at what is moving with the daily performance and just give us a recap here of how you're seeing it.
Well, good morning, Andrew. I tell you what we've seen in the last, and there's the chart, absolutely. I mean, gold is the standout, and silver, they've just been extraordinary. Gold sitting just under 26.50. Everyone's saying it's 27, got the horsepower to get there. People are now saying it could even be there by end of month. I know that's a pretty wild statement, but boy, all the analysts are pushing that sort of mantra. So that puts some fear as far as, where we're moving in that fourth quarter. And many are also saying 3,000 is achievable by end of year. So US dollar is bouncing a little bit. You're seeing the currencies there. Euro yen's been very, very hot, and the pound versus dollar has been a great trade as well. So energy's flatlining, not a lot to offer. 74.50 for Brent, 71 for WTI, and it's choppy, but certainly able to make a dollar out of it.
So, as I mentioned there, a lot of this coming, of course, with markets buoyed by that, certainly the Fed beginning its easing cycle and expectations, perhaps. So the market, they're pricing in another 75 basis points by the end of the year.
Absolutely, Andrew. Well, there's no meeting in October, so they're saying it's either going to be November or December. And there's now about a 70% probability. I just saw some data last night of a 50 basis point cut in November. So that seems to be the mantra at the moment. We've just got to wait and see how that all moves forward as far as job numbers, economic performance, PMIs, you name it, all the data, CPI, of course. And then as that drops this month and then early October, the Fed will get a good indication where it needs to be in November. I think it's November 7, 2 days after the election. So it's going to be plenty of fireworks leading up to November, and we've just got to see what impact that has from a Fed policy decision and how that transpires to, well, there's the chart, isn't it? Consumption and everything leading into Christmas.
Yeah. Well, that's going to be all important, isn't it, as they consider the next move, which, as you say, will be the next meeting being in November. So chances are they may well cut by another 50, if that's the case. Pete, another central bank of consideration is the Swiss this week.
Yeah.
What are the expectations?
Well, 60% probability, Andrew, of a 25 basis point cut. You're looking at 40% probability of 50 basis points. Headline CPI fell to 1.1% year on year in August. I would say that, where do you throw the coin? It's a pretty much a split decision. So I'll put my neck out there and say 25 basis points, but I won't be surprised if they were to knock it off 50.
All right. Okay, well, let's then turn locally. RBA. Tomorrow. Look, no move expected, but it's the commentary. How hawkish are they going to remain, do you think?
Well, they're absolutely right. I mean, 3.5% year on year in July, Andrew. 70% probability of a 25 basis point cut by December. So that's where it seems to be, I think, the storyline. And we've just got to wait and see, again, how the numbers drop, rhetoric and commentary from the RBA and all the other central banks, and then the mood, how that's going to roll into Christmas. Here we go. We're possibly 2.5 months from a rate cut. That'll be early December. It might be the Christmas present that everyone wants and needs.
We're going to get a read on, I think, what job vacancies later on. We've also got inflation too locally after the meeting. I mean, what sort of data points are you looking at the moment, Pete?
Well, I've got to look at those, and I've got to look at Chinese health. I've got to look at what's going on as far as Japan's on a holiday today, but I've got to look at what happens across the Asia region, that whole landscape. And that's where the RBA is very focused as far as consumption, what's happening with exports, Chinese demand, and naturally their performance of their economy, because we're so reliant on them from a trade perspective. So they're the little bits, and then the big bits, of course. Where does King Dollar play? What happens as far as the Aussie leading up near it's through 68 now, Andrew. So is 69 the new handle sometime over the next couple of weeks, with further softening expected for that US dollar leading into that rate cut decision in November.
So where do you see the Aussie tracking towards the end of the year then, Pete?
Oh, well, if we were to, I'd say this, Andrew, if they cut 50 basis points in November, we'll be at 70, but then we've got the rate cut, which will narrow the differential between the two, the two currencies as far from an interest rate perspective. So it's hard to pick it where it'll be on the 31st of December, but I wouldn't be surprised for it to take 70 and a half out sometime between now and then. And it may go a fraction higher. So it's going to be volatile. The currency traders love it. It's a heavily traded cross rate and never short of surprises, the old Aussie.